The impact of micro-investing apps on Gen Z's saving habits. In recent years, the financial landscape has undergone a significant transformation with the advent of micro-investing applications. These innovative platforms have emerged as powerful tools, reshaping the way individuals, particularly those belonging to Generation Z, Gen Z, approach saving and investing. This essay delves into the profound impact of micro-investing apps on the saving habits of Gen Z, exploring the intersection of technology, finance, and generational characteristics that have given rise to this phenomenon. Understanding micro-investing and Gen Z. What is micro-investing? Micro-investing refers to the practice of investing small amounts of money, often on a regular basis, typically through digital platforms or mobile applications. These platforms allow users to invest spare change or small sums, making the world of investing accessible to individuals who may not have significant capital to start with. Key features of micro-investing apps include round-up investments, automatically investing the spare change from everyday purchases, fractional shares, allowing users to buy portions of stocks rather than whole shares, recurring investments, setting up automatic periodic investments of small amounts, low or no minimum investment requirements, enabling users to start investing with as little as $1. User-friendly interfaces, simplifying the investment process for novice investors. Who are Gen Z? Generation Z, typically defined as those born between the mid-1990s and early 2010s, is the first generation to grow up as true digital natives. This demographic cohort is characterized by tech-savvy nature, comfortable with digital technology and quick to adopt new platforms, financial consciousness. Growing up in the aftermath of the 2008 financial crisis, many Gen Zers are cautious about financial matters. Desire for independence, strong interest in financial autonomy and early wealth building, social and environmental awareness, keen on aligning their financial decisions with their values. Preference for personalization, expectation of tailored experiences in all aspects of life, including finance. The rise of micro-investing apps. The proliferation of micro-investing apps can be attributed to several factors. 1. Technological advancements. The widespread adoption of smartphones and the development of robust financial technology, fintech infrastructure, have made it possible to create user-friendly investment platforms accessible to the masses. 2. Changing investment landscape. Traditional investment avenues often require significant initial capital and financial knowledge, creating barriers for young investors. Micro-investing apps address these issues by lowering entry barriers. 3. Shifting consumer behaviors. The on-demand economy has cultivated expectations for instant gratification and seamless user experiences, which micro-investing apps cater to in the financial realm. 4. Economic factors. In an era of low interest rates and rising living costs, particularly in urban areas, traditional savings accounts have become less attractive, pushing young people to seek alternative ways to grow their money. 5. Educational gap. Recognizing the lack of comprehensive financial education in schools, many micro-investing apps have incorporated educational components, filling a crucial knowledge gap. Impact on Gen Z's saving habits. The introduction and rapid adoption of micro-investing apps have significantly influenced Gen Z's approach to saving and investing. 1. Lowered barriers to entry. Micro-investing apps have democratized investing, making it accessible to Gen Z individuals who may not have the means to meet traditional investment minimums. This accessibility has encouraged many young people to start their investment journey earlier than previous generations. 2. Gamification of saving. Many micro-investing apps incorporate gamification elements such as progress bars, achievements, and social sharing features. This approach taps into Gen Z's affinity for digital engagement, making saving and investing more appealing and habit-forming. 3. Increased financial awareness. Through educational content and real-time investment tracking, these apps have fostered greater financial literacy among Gen Z users. This increased awareness has led to more informed financial decision-making and a heightened interest in personal finance. 4. Shift from traditional saving to investing. Micro-investing apps have blurred the line between saving and investing for many Gen Z users. Instead of keeping money in low-yield savings accounts, young people are more inclined to put their money to work in the stock market, even if in small amounts. 5. Emphasis on long-term thinking. While Gen Z is often characterized as seeking instant gratification, micro-investing apps have encouraged a more long-term perspective on financial growth. The ability to visualize potential returns over time has motivated many young users to think beyond immediate spending. 6. Integration of values and finances. Many micro-investing platforms offer options for socially responsible or sustainable investing, aligning with Gen Z's desire to make a positive impact. This integration has encouraged young investors to consider their values when making financial decisions. 7. Development of consistent saving habits. Features like roundups and automatic investments have helped Gen Z develop consistent saving habits almost effortlessly. This automation has made saving a background activity rather than a conscious effort. Case studies. Popular micro-investing apps and their impact. To better understand the influence of micro-investing apps on Gen Z's saving habits, let's examine some popular platforms and their specific impacts. 1. Acorns, one of the pioneers in the micro-investing space, has been particularly successful among Gen Z users. Its Roundup feature, which invests spare change from everyday purchases, has been instrumental in helping young people save and invest without feeling the pinch. Impact. Encouraged passive saving behavior. Introduced many first-time investors to the concept of dollar-cost averaging. Provided educational content through AHA Grow magazine, enhancing financial literacy. 2. Robinhood. While not strictly a micro-investing app, Robinhood's commission-free trading and fractional shares have made it popular among younger investors, including Gen Z. Impact. Sparked interest in individual stock picking among young investors, raised concerns about the gamification of investing and its potential risks, increased engagement with the stock market among Gen Z. 3. Stash. Stash combines micro-investing with educational resources, helping users learn as they invest. Impact. Enhanced financial education through in-app learning modules. Encouraged thematic investing aligned with personal values, promoted the habit of regular small investments. 4. Betterment. As a robo-advisor, Betterment offers automated investing services with low fees and minimum investments. Impact. Introduced Gen Z to the concept of passive, diversified investing. Encouraged goal-based saving and investing. Provided sophisticated investment strategies in an accessible format, challenges and concerns. While micro-investing apps have largely positively impacted Gen Z's saving habits, they also present some challenges and concerns. 1. Risk of oversimplification. The user-friendly interfaces of these apps, while beneficial for accessibility, may oversimplify the complexities of investing. This simplification could lead to a false sense of security or understanding among young investors. 2. Fees in proportion to investment size. Some micro-investing apps charge fixed monthly fees, which can be disproportionately high for users investing very small amounts. This fee structure could potentially erode returns for small-scale investors. 3. Lack of diversification. Apps that focus on fractional shares of individual stocks may encourage users to build poorly diversified portfolios, exposing them to unnecessary risk. 4. Gamification concerns. The gamified nature of some apps might encourage frequent trading or risky behavior, potentially at odds with sound long-term investment strategies. 5. Data privacy and security. As with any financial technology, there are concerns about data privacy and the security of personal and financial information shared through these platforms. 6. Regulatory scrutiny. The innovative nature of these platforms has sometimes outpaced regulation, raising questions about investor protections and the need for new regulatory frameworks. The broader implications for Gen Z's financial future. The adoption of micro-investing apps by Gen Z is not just changing their immediate saving habits, it's potentially reshaping their long-term financial outlook. 1. Earlier. Start in wealth building. By lowering barriers to entry, these apps are enabling Gen Z to start building wealth at a younger age than previous generations. This early start, combined with the power of compound interest, could significantly impact their long-term financial health. 2. Shifting attitudes towards financial institutions. Gen Z's comfort with fintech solutions may lead to a decreased reliance on traditional financial institutions. This shift could force established banks and investment firms to innovate and adapt to maintain relevance with younger customers. 3. Increased financial independence. The accessibility and educational aspects of micro-investing apps are fostering a sense of financial independence among Gen Z. This self-reliance could lead to a generation more confident in managing their own finances. 4. Potential for more engaged investors. As Gen Z gains experience through micro-investing, they may become more engaged and knowledgeable investors in the future, potentially leading to a more financially literate society. 5. Changing perspectives on risk. Exposure to investing at a young age might influence Gen Z's risk tolerance and understanding of market dynamics, potentially leading to more nuanced financial decision-making in the future. The future of micro-investing and Gen Z. As micro-investing continues to evolve and Gen Z advances in their financial journeys, several trends and possibilities emerge. 1. Integration with other financial services. Micro-investing apps may expand to offer a wider range of financial services, becoming comprehensive personal finance platforms that cater to Gen Z's diverse financial needs. 2. Enhanced personalization. Leveraging artificial intelligence and machine learning, these platforms could offer increasingly personalized investment advice and strategies tailored to individual goals and risk profiles. 3. Expansion of educational tools. To address concerns about financial literacy, micro-investing apps may develop more sophisticated educational resources, possibly partnering with educational institutions or financial experts. 4. Increased focus on sustainable and ethical investing. Aligning with Gen Z's values, micro-investing platforms may place greater emphasis on sustainable, ethical, and socially responsible investment options. 5. Regulatory evolution. As the micro-investing sector matures, we can expect more defined regulatory frameworks to emerge, potentially reshaping how these platforms operate and interact with users. Conclusion. The rise of micro-investing apps has undeniably made a significant impact on Gen Z's saving habits, democratizing access to investing and fostering a new culture of financial engagement among young people. These platforms have successfully lowered barriers to entry, gamified the saving process, and integrated financial activities into the daily lives of a generation known for its digital nativity and value-driven approach to life. While challenges and concerns exist, particularly regarding oversimplification, fee structures, and the potential for encouraging risky behavior, the overall impact appears to be largely positive. Micro-investing apps have not only changed how Gen Z saves, but have also influenced their broader financial outlook, potentially setting the stage for a more financially literate and engaged generation. As we look to the future, the continued evolution of micro-investing platforms, coupled with Gen Z's growing financial maturity, promises to reshape the financial landscape further. The long-term implications of this shift are yet to be fully realized, but it's clear that micro-investing apps have played a crucial role in empowering Gen Z to take control of their financial futures. The true measure of success for these platforms will be their ability to not just facilitate small investments, but to nurture a generation of savvy, responsible investors who are well equipped to navigate the complex financial world that awaits them. As Gen Z grows and their financial needs evolve, it will be fascinating to see how micro-investing apps adapt and continue to influence the saving and investing habits of this dynamic generation.